Hi everyone. In the last video or two videos, we worked on the operating budget. Now we're going to move over to the cash budget. So we're going to go to the next tab or page of your worksheet, depending on if you're online or offline, and we are going to calculate our cash budget. All right. So the first thing we need to figure out is our cash receipts, and then we'll do our cash payments. The first step for our cash receipts is our budgeted sales dollars. So we know we have that over on our sales budget. So I'm just going to enter that in for April. All right. So we say, let me go over to additional information where it actually says this. Okay. Here we go. In E, it says the company expects 30% of sales to be for cash and the remaining 70% on credit, and receivables are collected in full in the month following the sales. Okay, so going over to our cash budget. So we're going to get 30% of this month's sales in cash this month. So I'm going to say plus my budgeted sales times 0.3. So I am going to collect in cash this month 30% of my current month's sales. I'm also going to collect my AR from last month, and my accounts receivable was 70% of last month's credit sales. Now you're saying, hey, I don't know what last month's credit sales are, but you know what? Lucky duck us, we know what our accounts receivable balance is. So I'm going to go over to my balance sheet, and I know my accounts receivable is $175,000, and the only thing in accounts receivable is our credit sales. So I know that's the amount of cash I'm going to collect this month. Those were last month's credit sales. All right, so my total cash receipts are $253,750. Okay, the next thing I need to do is find, so now that we have that, we can put it into our cash budget. So you can see I've copied the $253,750 down into our cash receipts, but I need to find out my beginning cash. Once again, I'm going to go to my balance sheet. And my balance sheet tells me my beginning cash is $50,000. Remember, last month's ending cash is this month's beginning cash. All right, so I have beginning cash of $50,000, cash receipts of $253,750. Now let's look at our payments. Okay, direct materials. Let me see if I have some information about direct materials. In fact, here in F, I do. It says all direct material purchases are on credit and no payables arise from any other transactions. So what that tells me is that everything that's in accounts payable is related to direct materials purchases. 1 month's purchases are fully paid in the next month, and materials cost $12.70 per pound. Okay, so going over here, so I know that the only thing impacting my accounts payable account is my direct materials, and they are all paid in full in the following month, which means the amount of direct materials I'm going to pay in cash this month is last month's accounts payable. So I'm going to go over and find last month's account payable, and that must be my materials purchases from last month, which I'm going to pay in full this month. I'm using a negative for my payments, just because that's how I've set up my formulas. If you want to do it differently and change the formulas, that's totally fine. All right, direct labor. Direct labor, we're going to pay in the same month we incur the cost because people like to be paid right away. So to find my direct labor, I'm going to go over to our direct labor budget, and in April, our budgeted direct labor dollars were $36,375. And so I'm going to bring that number over for my payments of direct labor. Variable overhead, we also are going to pay in the month incurred. How do I know? Because the only thing going into accounts payable, it said, was direct materials, which implies that everything else must be paid in the month that the expense is incurred. So I'm going to go over to my variable overhead budget, and I'm going to bring over $8,730, which is what I spent on variable overheads. All right, fixed overhead cash portion. let me go back to my additional information. And what I am going to find is that fixed overhead consists entirely of $5,000 of monthly depreciation expense. Now here is my question for you. Is depreciation a cash expense? No, it is not. So when we go back over here to our cash budget, we're going to put 0 because our only fixed overhead is depreciation, and depreciation is a non-cash expense. All right, sales commissions. I can go straight over to my sales commission budget, and I know they're $31,500. Sales salaries, I can go over to my sales salaries budget. And G&A salaries, I'll go to my G&A budget. Interest on long-term notes payable, that's in my G&A budget as well. Interest on short-term notes payable, I think we need to go to our other information page. So right here, G, it says the minimum ending cash balance for all months is $50,000. If necessary, the company borrows enough cash using a short-term note to reach the minimum. Okay, so that means if we have less than $50,000, we're going to borrow on a short-term note payable to get ourselves up to $50,000. And our short-term notes require an interest payment of 1% at each month end before any repayment. And then if the ending cash balance exceeds the minimum, the excess will be applied to repaying the short-term notes payable balance. All right, so my question is, do I have a short-term notes payable balance? So I'm going to go back to my balance sheet, and sure enough, we borrowed $12,000. And if I look here, that means my short-term notes payable interest is going to be 1% of $12,000. So I will do minus 12,000 times 0.01, and I have interest on short-term notes payable of $120. All right, dividends, going over here, looks like we're only going to pay one dividend of $100,000, and it's going to be paid in May. So since I know that, I can go ahead and put this in May. And capital expenditures, if I go to my capital expenditures budget, I know that I'm only going to buy one piece of equipment, and that's going to be in June for $55,000. So I'll go ahead and put that in here if I don't forget. All right, but it's going to be 0 for dividends for April, 0 for capital expenditures in April. So my total payments are $153,843. The formula I put in here was to take beginning cash. Why is that not showing up as a formula? Very strange. Let me type in the formula. I'm going to take beginning cash plus cash receipts minus cash payments, but it's already a minus, so I'm going to put in a plus sign. I'm going to end up with $149,907. So that's my preliminary cash. Now, I need to have at least $50,000 cash, or I need to borrow money. Well, I have way more than $50,000 in cash, so I don't need to borrow any money. But if I go over here and look again at this section about my short-term notes payable, it says if the ending cash balance exceeds the minimum, the excess will be applied to repaying the short-term notes payable balance. So in fact, I do have enough money to repay my short-term notes payable balance. I'm going to go double check. $12,000 is what I need to repay. So I'm going to subtract 12,000. And my ending cash is going to be $137,907. That is my cash budget for April. So now I'm going to end this video. I'm going to end this video, and I want you to go and do the cash budget for for May and June. And then after you look at that, or after you do that, then you can go check out the video and or the answer key that shows you how to solve for May and June. just to check your work. Okay, I'll see you then.